back to the channel. We have a lot of big news to share with you in today's update. Now, tomorrow is actually going to be the big day for markets with CPI, other Fed speakers, but we do have some comments from Trump, and we do have a China tariff negotiations deadline tonight at midnight. And I will share what Trump said about this, among other things, and how the markets are likely to respond in the coming days. With that said, ladies and gentlemen, hit that like button, subscribe to the channel if you have not done so already, and check out that link down below in the description of this video to come join the trading community, the best trading group in the entire world, where we are really the only ones that I know of going out actively seeking to invest in small cap AI companies. Not the bad ones, but instead the good ones that nobody knows about yet. I don't own Big Bear, right? BBAI, right? I don't own SoundHound. I don't own, some of the more high flyer ones that you've heard of. And that's the point. Because when mine blow up, that's where potential life-changing amounts of money will be made. And I think it's going to happen. One of them in particular, I think, is going to explode towards the end of August after they report earnings. Not a financial advisor, not a financial planner, not your parents or your uncles or your grandpa or none of that nonsense that gives you investment advice. So do not listen to me. I'm not a financial advisor. You will lose all of your money if you listen to anyone blindly and do not do your own due diligence. But more importantly than that, if you don't understand a company for yourself, the first red day, you're going to want to hit that sell button and then you're going to miss your opportunity. That's why it's always important to do your own due diligence. It's not because what I say or what other people say is wrong. The facts are the facts. It is because if you are not confident in your investment, you're going to lose money. Okay. With that said, check it out. Link down below in the description of this video, but on to today's episode. Now, with that said, let's go ahead and get into all of your broader market news today and upcoming catalyst for this market. Donald Trump has said that tariffs are making our country strong and rich. EU's foreign minister Callas says, quote, "We will work on more sanctions against Russia, more military support for Ukraine, and more support for Ukraine's budgetary needs and accession process to join the EU." Trump says he's placing Washington, D.C. and the police department under federal control and deploying the National Guard. Trump on Putin meeting says, "I am talking to the European leaders before the Putin meeting." Now, Trump says he is looking to reclassify the devil's lettuce as a less dangerous drug. Trump says he has negotiated down to a 15% tax, essentially, on chips. Trump says Nvidia's H200 is obsolete, but it still has a market in China. Trump says he wants 20% if he approves a chip export. Trump says, "I think there will be another meeting about the Blackwell chip. Nvidia's CEO sought payments from chip makers on some sales." Trump says he wouldn't make a deal without Nvidia's new chip. Trump on Putin meeting, he says he can see increased trade with Russia following a Ukraine deal. Trump on Putin meeting in Alaska says Zelensky could go to the meeting, but then he goes on to say that they've had, fighting for 3 years and there hasn't been a deal yet. Probably best if he doesn't come. Trump on this Putin meeting calls it, quote, "a feel-out session," says he will urge Putin to end the war and hopes for constructive talks. Plans to speak with Zelensky next, possibly in joint meeting with Putin. Notes there may be land swaps and will try to secure some territory back for Ukraine. Open to leaving without a deal and will call European leaders after meeting. Wants to see a ceasefire. So this, again, is not important because Wall Street cares about war, right? Wall Street doesn't care about the war in Ukraine. It makes zero difference to the markets whether it's happening or doesn't, okay? What is important is the Trump secondary tariffs on countries like China and India. Now, here's the way that I look at this, just to kind of give you the 360 overview, okay? If Putin is the one delaying peace, then we have a problem. If Zelensky is the one delaying peace, we don't have a problem. Because how logical would it be if Putin wants to end the war, Trump wants to end the war, but Zelensky doesn't, to, harass or make it harder for countries to buy Russian oil, right? To slap a tariff on China or slap another tariff on India, right? That doesn't make a lot of sense if Zelensky is the one holding this thing up. Now, if Trump and Putin say, hey, we just agreed to a deal, what do you think, Zelensky? And Zelensky says, yeah, no, we're good. We're not doing that deal. You think Trump's going to go put tariffs on China and India and all these other countries for buying Russian oil when Zelensky's the one holding it up? So long story short, if Trump and Putin come to some kind of agreement, that's great. If they don't, that's bad. Okay? If Zelensky is the one holding things up, that's good for markets. Versus like Putin holding things up. Hopefully that makes some sense. And that's why we're talking about this, because whoever's holding it up, that's really the implications for those secondary tariffs. And that's where the markets would not like this situation. But Trump says it's not up to me to make a Russia-Ukraine deal. And again, Trump on Putin meeting says, I'd like to see a ceasefire. Trump says he will see the parameters, may leave, and say good luck. Trump says there'll be some changes in land. Trump says after Putin, Trump's meeting, then there's probably going to be a meeting with Zelensky and Putin, and he will attend that meeting if they want him to. Trump says that he is expecting constructive talks with Putin and says that he really respects Putin for coming to America for this meeting. And you can see that here. Trump says, I think it's respectful that Putin is coming to the US. Trump on China trade says, quote, they've been dealing nicely. And Trump was asked today about the deadline for negotiations with China today. And Trump on China trade says, quote, we'll see what happens with the deadline. It's going to be, kicked down the road. We're not going to have this deadline, and tariffs are going to snap back to 145% on China tonight. And I think, again, judging on what the markets are doing today, we're already pricing that in. Donald Trump says that he's going to look at New York and Chicago if they should also be under federal control to clean up the cities. And Trump says that tariffs give us great power over enemies. I also want to share this with you because I think it's so bearish, it's bullish, okay? Bank of America says stagflation fears are dominant. In Bank of America's August fund manager survey, 70% of investors expect global stagflation, high inflation and weak growth over the next year, unchanged from July. Stagnation is seen by 12%, up from 10%, a boom by 7%, down from 10%, and Goldilocks scenario by 7%. So nobody's expecting a super good outcome here, right? When people are all really bearish, it's easy to get a better than expected outcome. And I think that's the setup that we're faced with. And by the end of this year, it's going to be clear we're either in the Goldilocks scenario or the boom scenario, where maybe inflation's a little high. Maybe we're working through some of the, one-time price increases from tariffs, but growth is good. AI investment is good. Consumers recovering a little bit. Or maybe we're in a Goldilocks scenario. I wouldn't be surprised if by the end of this year, the first couple months of 2026, we are in a Goldilocks scenario where we don't have an inflation problem. We're getting a bunch of rate cuts. Consumer is recovering. Economy is doing just fine. Earnings are coming in better than expected. AI investment is continuing. Capital expenditures are skyrocketing via the big, beautiful bill and the 100% capital depreciation on that. Some of the other provisions like no tax on tips, no tax on overtime, being able to write off interest on car loans, and many other things contributing to a consumer getting better. You can start to really see a positive dynamic starting to form. Maybe, real estate starts to be able to move again, right? As rates come down. I was talking to someone at the beach the other day that is in construction in Florida. Really, remodeling homes and buying and selling homes and all of that. He says that he thinks when rates come down, we're going to have a boom. He doesn't think there's going to be a lot of pressure on prices because there's going to be so much demand still. Okay. So, take it for what you will, but I think there's a much higher chance of a Goldilocks or a boom scenario than what Wall Street is assigning here, around a 7% likelihood. That to me just doesn't make a lot of sense. You can see today the percent of stocks trading above their 50-day moving average is down to 49.13%. So markets internally definitely look a lot different than what the headline S&P would suggest, that we have a pretty strong market recovering close to new all-time highs, whereas in fact under the surface it is not nearly as strong. You're not super weak, like it could be a lot worse, okay? But you only have about half of stocks above their short-term 50-day moving average. That's not like super great or super bullish at the same time. The AI Investor Sentiment Survey came in at 34.9% bull, 21.9% neutral, and 43.2% bear. We'll get a new one updated on Thursday. And today, we really did not have any economic data, but things start to pick up a bit for tomorrow. Today, you had a couple of bond auctions, no big deal. Tomorrow, we have core CPI, okay? Year over year, month over month, headline year over year, and month over month as well. Bunch of Fed speakers. Long story short, we're expecting a little bit of a rise to inflation, but not anything too dramatic. So if it comes in too high, that's bad. If it comes in low, well, that's good. Is 0.3%, okay? But it's going to come in at a decimal point. The best way to understand this is to simply do a calculation, okay? 0.3% can be technically 0.25, okay? Because then you're going to round up to 0.3. So 0.25 is going to read at 0.3, but it's actually right in the middle, okay? Times that by 12, which represents 12 months, that's 3% kind of annualized CPI. That's where, in fact, the core rate year over year is expected to come in at about 3%. But let's say you come in at 0.34%. That's a high 0.3, but you're still going to round down to 0.3 on the headline number, but times that by 12, and you're looking at 4.08% annualized inflation. Over a 1% difference between technically the same number. Okay, so the decimal point is going to be very important. That's why, even if we come in at 0.3, maybe it's not, bad at all. Or if we come in at 0.3, it could be really, worse than expected. Okay, personally, I don't think we're going to get a bad numbers tomorrow. I don't see the inflation. I don't think we're going to get a high number tomorrow. Again, anything's possible. I've been wrong before, but that's definitely not my view. Now, headline month over month is expected to come in at about 0.2%. Last month, it was at 0.3%. So expecting a deceleration on headline inflation. And headline year over year is expected at 2.8%, up slightly from 2.7% last month. Okay, so that's the actual expectations. Fed Barkin will be speaking at 10 o'clock in the morning and Fed Schmidt at 10:30 in the morning. Let's see if some of them flip-flop. We've had, Fed Kashkari now suggest that maybe we should cut rates. Fed Bostic suggest that, maybe 2 rate cuts is appropriate this year. Fed Bowman strongly team rate cuts. Fed Waller strongly team rate cuts. The new appointed Fed governor by Trump is going to be strongly for Fed rate cuts. So there's going to be definitely some momentum to get some rate cuts going very soon. And 2 to 3 cuts this year is really where the markets are at right now, fighting between 2 or fighting between 3. And depending on how these inflation numbers come in tomorrow, it could move the needle towards, either 2 cuts or 3 cuts or, many consecutive cuts at future meetings. So that's going to be very important coming tomorrow. Now, you're also going to get some important earnings tomorrow, okay? Today and after hours, you have earnings from Big Bear AI, Oklo, AMC, AST Space Mobile, Archer, Microvast, Plug, and GoPro. But tomorrow is going to be really, I believe, the biggest day of this week as far as earnings, because you have Circle pre-market, C, and Pony AI, Cardinal Health, and PaySafe as well. And then Tuesday and after hours, you have CoreWeave, Rigetti, Kava, H&R Block, and some others. So definitely some more high flyer AI like names that report tomorrow. Another big day is going to be Thursday, pre-market, JD.com, John Deere, Advanced Auto Parts, Birkenstock, and Weibo. And then in after hours on Thursday, Applied Materials and New. So tomorrow, I think, is actually the biggest day for earnings of this week. But we're still going to have a bunch of earnings coming out over the next couple of weeks. A lot of smaller cap, a lot of AI names, even NVIDIA that still has to report. Hopefully nobody's forgotten that. Earnings season is not over yet. So let me know your thoughts on all of this down below in the comment section. Again, August is seasonally like a neutral month. Some years it's down, some years it's up. It's August 11th, so we're in August, okay? September is decisively a bad month most of the time. Could that be different this time? Sure. But October, November, December get a lot better from a seasonal perspective. And that's kind of where my money's at right now. I don't know what's going to happen in August and September, but second half of October through November and December should be very strong. The last 2.5 months of this year is what I am positioning for right now, while understanding anything can happen in the next 2 months. Okay? So let me know your thoughts on this down below in the comment section. Have a great rest of your day, and I will see you in the next one.